Perfect timing. Perfect timing. All right. All right. How you doing? Good morning. Did you complete the poll? All right. Let me move that over here. Let me move that over there. Guten Morgen. Almost ready. Huh? What do you stink? There we go. Nice. All righty, let me mark this as the beginning. 3, 2, 1, kick posted. Good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. I wonder how I can change this zoom. It's zoomed weird, huh? I don't know if I can. Can I? Let me try it. Configure video. Yeah. Hey, cool. Let's see if we can do this. Camera control. A little less zoom in. How does that look? A little better? A little better. A little more, less zoom. That even works, huh? Let's do that. Boom. Cool. We just did that live. All right. Cool. All right. So anyways, my name is Wayne McDonald and I salute you. Today is Wednesday. We made it to the midweek. Cool. Anything going on today? Let's see. I'm doing a fourth quarter outlook. We're going to look at dozens of different economic reports pulled from the Fed, and we're going to analyze international and domestic economic trends, see where we've been over the last 3, 6, 9 months, and see if things are improving or not improving, whether we should be considering buying in the fourth quarter or selling in the fourth quarter based on all this research. It's kind of like figuring out where on the map you are so you end up getting where you're trying to go. So that's what we're going to do today. It costs a lot of money, though. It costs 10. No, I'm doing all right. No, I'm doing all right. Seems like, I don't know why YouTube's having a problem. YouTube is not receiving enough video. Really? Maybe I need to reboot. Well, I can't reboot now. I've started. So anyways, look at the description below. There's a link to tradersway.com. You should go check them out. Open up a demo account. They're a trustworthy foreign exchange broker. There's a link to my book. There's a link to Quant-in-a-Box.co. There's a link to, lots and lots and lots of helpful resources there that you've asked for over the decades that I've been doing this. And so now they are available to you. One of them, like TradePlans.ai, is completely free. There's no monetization whatsoever. I just spent thousands of dollars building a tool that is helpful, and you'll get feedback on how to do technical analysis for free. Yep, that kind of stuff. So very cool. So anyways, let's get on with it. Thank you for being here. Okay. Let me move that over a little bit. Yep. So here I'm on my Traders Way MT4 account. And one of the things I'm eyeballing, I'm not ready to pull the trigger. Oh, look at that. That's pretty much the analysis. Check this out. Let me get rid of that. I'm just looking at this peso area. Let's delete it. I'm thinking about this. Like, this seems to be a level of resistance. So if you were a bear, not saying you should be a bear, if you were a bear, you would look at this as a potential opportunity for a double top. So you drop into a smaller time frame and look for rotation from north to south. But you'd have to be a bear anyways. But if you were a bull, this would be a terrible place to buy. So it's useful information either way. So just a heads up. So tomorrow we have GDP. Friday we have PCE. We have a government shutdown coming. We have Republican debates tonight. It's interesting. Okay. It's interesting. So busy. Good morning, madam. So what are you trading today? Can we get a few more votes? Maybe I'll leave it up there for a bit. We can look at Euro-ZAR while I wait. What do you think about this? Well, let's analyze it. Okay. Let's analyze it from the top. Okay. There's our analysis there. Let me reset it from here. So we've had a long-term trend up, as you can see. But the shorter-term trend says maybe this is flipping around the other way. Okay. Interesting. Long-term versus short-term. But even the short-term is long-term for most people, right? Because I'm going back to like April, May. Peaked out here. Okay. And if you were going to be a bear, which is the same as that peso trade, somewhere around 20, and then your target is somewhere around, 1925, 1920. Greg says, the most concern I have is for China and Russia's futures. Yeah, for sure. Yeah. For me, that's a big deal, but the debt level in the United States is a big problem for me as well. Okay. So like, for example, we'll take the situation. I believe the government in general, whatever that means, the government, is negligent or incompetent. Negligently incompetent or incompetent negligence has led to extraordinary levels of debt. And I guess that we'll call that negligence. And then because of their incapability, they're not dealing with the problem. In fact, they can't even deal with themselves. And so in a time of, I would call, debt crisis, in which we should be paying down debt and keeping economic growth strong. Because remember, if you're increasing productivity, things get cheaper. If you pay people more money, you create inflation. So I'm anti-union. Just, if you didn't know that, now you know it. So I'm like, I wouldn't be saying, how should we pay workers more? I would be saying, how can we make more cars to compete against China? But the more cars you make, the cheaper they get. Right. You lower costs. You don't need to raise wages if prices are coming down. But anyways, so we got to keep the economy strong. We don't want to slow it down, in my opinion. But we need to increase that revenue and then tax that revenue to pay down the debt, because I think we're in a debt crisis. So instead, if we have a government that has extraordinarily high levels of debt, and by the way, I will cover this in today's presentation. I'll show you the debt levels of the Fed, for example. You guys going to attend? I'm going to show you the debt levels at the Fed. So I'm going to show you the Fed's balance sheet. It would be one of the dozens of things I cover to show you if things are getting better or worse. Okay? But we need to pay down this debt. But instead of dealing with that, the government's probably going to shut down and do nothing. Well, that's not much of a solution, huh? So anyways, so that's kind of my concern there. I guess I need to reboot. I can't reboot in the middle of a presentation. I'll reboot before our stuff this afternoon. All right, so euro, huh? Okay, let's do some euro. Here's one we set up a week ago. Still hasn't worked, still hasn't not worked. Okay, we are now at the high side of this trend. And you can see what we're trying to do, get this down here. Now the range is tightened up because we lost the volatility. And on the long run, I think Aussie should be weak too. That's my big problem with some of these trades, is that like Aussie was strong, but when you look at the bigger time frames, it really shouldn't be. But indirectly it is. If everything else is getting weak, it gets strong. But I have serious concerns about the Australian export market. Terrible, terrible situation for Australia. So anyways, maybe that's what's being reflected with the sideways. Euro definitely should be weak, and Aussie probably should be weak, but was definitely trending down, and still technically is trending down. Okay? So if you're a trend trader, you would say get ready for a downward move in the next few days. Swissy weak, even against euro. I think it was Monday we were discussing this in the day trading group at investorbootcamp.com, and we were talking about who was propping this up. Euro Aussie, this one's performed better. We've gone from M3 to S1. Our target, as you can see, is 175 at M1. M3, M1. And that's working tickety-boo. Hopefully we just kind of do one of these things, right? I don't really want to do this. It's kind of more work, but whatever. Whatever, I take it back. I don't care. Oh, Favor says FTSE. Okay. By the way, you have FUTSE. It's Financial Times Stock Exchange. So FTSE. It's easier to spell if you know what it stands for. But FTSE, yeah, that's how you would spell it. But it's an acronym. But yeah, what do I think about the FTSE and S&P 500? Yeah, that's a valid question. So anyways, dump the euro. Here's one other one, Euro CAD. Remember, our ultimate target is 141. some change, 141.50 maybe. So riding at 21, baby, riding at 21. Oh, it's so good. It's so nice. Look at the roll reversal too. The breach, the pullback, roll reversal. What used to be support becomes resistance. Beautiful. So you remember, you wake up in the morning and you want to sell the euro. You wake up in the morning, you want to sell the pound. You wake up in the morning, you want to sell the Swiss franc. This is the kind of stuff we cover at Investor Bootcamp all the time. So if you wake up in the morning trying to figure out what to do for the day, you probably are going to lose money. Just so you know. If you wake up in the morning and you know exactly what you want to do, you just don't know if you'll get the opportunity, you'll probably do just fine. Okay? Yeah, I don't know what's going on with the internet today. Or something's bugging something. My internet's fast, man. It's all right. I guess I need to reboot. So I'm doing 130 down, which is not great, but it's enough. But then my up is fast enough for all of this. Yeah, it's not great though. Something is bogging me down. What matters is the upload. Oh, my upload is, oh. I don't know what's going on there. Yeah, but yeah, that's weird. I guess I need a reboot, so I'll do that. I'll reboot. Definitely before my presentation today. Like I said, if you're attending today at noon, I have a special announcement that I'll do there. Okay. And book some extra time this afternoon. I might have to speak for 3 hours straight. Hour and a half on the Q4 outlook, and maybe an hour and a half on something else. Wink, wink, nudge, nudge. All right, cool. So let's go to the stock market. All right, where do we want to go? All right. Okay, the way to trade this and the way to own it are probably two different things, right? So, look, back in July, we had a basic assumption that that was the top of the year. Well, I shouldn't say the top of the year. The top of the last quarter? How do you say it differently? Canada Day is a peak. How about that? And that somewhere, either the third week of August or the third week of September, we look at those periods of possibly buying back. So if July 1st was a peak, like let's say August 20th, or let's say August 25th or September 25th, we might want to consider buying. Okay? Buying it back after the dip, after the retracement. Well, we're in that period now. So here's the thing. When we look at this, we have a 382 Fibonacci retracement from the top in the S&P 500. Can I start buying now because it's a 382? Can I start buying now because it's the third week of September? And all this was planned out 9 months ago in my Q1 outlook. And I would venture to say yes. Now, a trader might say, well, let it fall a little further. Well, when investors make mistakes, and these are the ones that want to hold for long periods of time, what do they end up doing? Buying way too many stocks at high prices, and then holding on to them on the way down, and then selling them at the bottom, and then missing the rally again, right? So what do I do now? Well, I have to combine my trading ability with my investing ability. So when I look at this peak, I need to ask myself, when do I start trying to accumulate? And by the way, I removed some risk off the NASDAQ. So now maybe I'm going to be interested in buying some NASDAQ back, for example. So when I start to get interested, it's in this area here. And I already talked about this on Sunday and Monday, so you already know. Okay? And my first buying price was a breach of 43, which is here. My next number was actually 42, which is here. Okay, that's based on monthly pivots. But also remember, in my Q1 outlook, I said I would be ready, willing, and able to buy the stock market for sure in the third week of SEP, which is now. And right, so here we are, the third week of September. Now, we've had a decline, which was expected, once again, in my Q1 outlook. Q1, dude, January. We talked about the market coming down on Canada Day, which is, roughly speaking, right there. Okay, down, 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 down. So far, 6 to 9 months in advance, we had a model for what would likely happen. And in that model now, I say I should be ready for some up. I don't know if it's going to appear. I don't know if it's going to appear. I don't know if it's going to appear. But I do intend to buy. Now, I know as a technician, the 618 is better. So that's a retracement all the way to 4,000. Okay? Cool. So I am now in a phase in which I've purchased some here. S&P 500? Yeah. Mm-hmm. Because it's falling. Now, a trader does something different, right? You sell because it's falling. So the difference is time. So as long as you're below the 2155, right, you want to keep doing this. And then once the 2155 crosses up, then you have a new trend, right? So I'm trying to combine both. But the big thing here is what I'm saying is, if most traders, okay, and investors, they buy, then they hold, right? Let's do that in a different color. They hold, they exit, okay, wherever the bottom ends up being, then they miss all of this. So I definitely don't want to do that because I want to expand when prices come down. Otherwise, I wouldn't do that if I thought this was the end of the stock market. That over the next 20 years, the stock market was going to go to zero. Well, I don't think that. So I'm in this period now of like, ooh, well, I should be understanding what this period is, but I also need to understand, like, I guess, how about this? Let's attack this from a different point of view. when you hear that, and by the way, I'm going to show you this in an upcoming presentation, but if you look at the last 50 years of the stock market, 50 years, let's say, and you say the S&P 500 goes up 10% a year, well, how does that translate if you bought a lot at a high price, held during a pullback, and then exited low? Do you still average the 10% a year? The answer is no. You're going to underperform. You might even be, let's say, zero. If you don't accumulate on the way down and you don't take profit on at the top, then your numbers are quite different. Now, if you just, what's hodl? Do you know that? Hold on for dear life. It's like FOMO, hodl. If you hold during the 30, 40, 50, 60% pullbacks, then you don't have realized losses, and you just float like a cork in life and you pick up your 10%. But what if you did something different on top of that and you say, well, take some profit here. Now, for that, you're going to need to know things like seasonality. Thank you, Quant-in-a-Box. To know, like, maybe you should take some money off the table when it comes to NASDAQ. Rotate that into something less of a beta, less volatile, maybe something safer, okay? So you do some risk management. Now, most investors don't do any risk management, but then you get to this point where you save some cash, and maybe in the lower bound, when other people are cashing out for losses, because you're doing better risk management, when the cliche traders are cashing out low for losses, you're buying it from them. You're helping the weak, the sick, the lazy, and the incompetent, the cliche. You're helping them out by buying their Google from them for 30% less than they paid. So they owned it and it was a high flyer, then they wrote it down -30, they take the loss, you accumulate, and then of course the world returns, but maybe it takes 2 years, maybe it takes 5 years. But nonetheless, humanity continues on with its expansion. Okay? And then what? So over 50 years, you might be able to outperform, because at the lowest point of the bear cycle, you accumulate and you own more assets. You convert your money, which, by the way, money is valuable during a bear market, right? Everybody's selling their stuff because asset prices are falling. If your house value is falling, you sell your house and you buy cash. That's a trade. You sell your house for cash. If we're in a bear market, you sell your stocks for cash. But at some point, cash is trash, and you got to do something. You got to convert your cash back into an asset. Well, maybe the stock market is a good asset. Maybe real estate's a good asset. Or maybe you use all your money just for food. Well, that's the cray-cray inflation. If you're selling a real asset so you can afford to buy food, you're giving up your retirement account so you can buy food? Oh my God, well that's a zombie apocalypse situation, right? Okay, so anyways, so I'm trying to be, I'm trying to be the one that might be able to do this. Outperform by what? Taking on more risk? No, I'm trying to outperform by having better risk management. The first guru in the history of YouTube to ever preach outperformance by better risk management. Yeah, the Get Rich Slow channel. So anyway, so I took some risk off, and now I've accumulated some risk. Is that going to be the lowest low? I'm not interested in the lowest low, but it could be. I know seasonally, this 20 years. But do I care whether I went long at 4,200 or 4,100? Not really. The idea is I'm going to accumulate both, but I don't want to miss the down because I want to get big with prices when prices are cheap. Again, a trader sells because prices are falling. An investor will buy because prices are falling. You see this in the COT report, right? The Commitment of Traders report. There's like speculators, and then there's the commercial users. I'm using cash like a commercial user. I want to own the S&P 500 and the Dow and the NASDAQ. Okay? Russell's too volatile for me. And I'll have to talk about that sometime soon. But I'm at like a commercial. I'm thinking like an institutional. And yeah, we have a 382 at 4,200. We also have a monthly on a different chart. I guess we'll do it here. Stop. No, I think I have a different setup for this. Yeah. Okay, let me zoom in. Okay, I have these as prices already marked.